Hey, if you're watching this video right now, I want to assume you've read so many books on psychology, taken so many psychological courses, been frustrated about your performance in your trading as regards to your psychology. The reason why you could not just help but over leverage. The reason why you cannot help but stay impatient when you enter your trade. You've done everything you can, and maybe just some of you are beginning to give up on trading because now you feel like this trading thing is really not that easy. But this video is meant for you. And here I'm going to show you what you've been doing wrong. I'm going to show you so much relative mistakes you've been making, and I'm going to show you how to fix that in this video, and I'm going to postulate a formula for you that you can use in fixing your trading psychology deficiency. So let's go. All right, so let's get straight into it. Many of you guys that are going to be watching this video, like I said, frustrated, and you're just tired. You really don't understand what is going on. It's making you feel like you're a failure, you're a loser, because you think trading was all about having the right strategies. And when you have the right strategies, you're good, you're going to make profit. Until you got the strategy, and now you're saying that it's really not about the strategy. So for me to start this crash course, I'm going to first start by introducing you to the very first stage of this realization, which is what I refer to as the trader's bubble. This is what I refer to as the trader's bubble. The trader's bubble. So what is a trader's bubble? A trader bubbles is just what I refer to as fantasies that you have before trading. So many of us, many of you guys, when getting into the Forex trading, you've been painting this picture that Forex trading is where you can make exclusive amount of money. And because of that, you have this mindset before you get into Forex trading. And it was just like, yo, all I got to do is learn how to do this and do this and do this and put these indicators and wait for this crossovers on the moving average and blah, 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 blah. And then you're going to make money. And that is the bubble. And basically, the bubble is more about focusing on the technical side of things and forgetting the fact that the trading it's a game of you versus you. It's not you versus market. Whatever you do in the market is a reflection of who you are and what is going on in your mind. If you make consistent profit on the market, it's not about your technical strategy. It's really about your state of mind and your relationship to the market. So this is the first bubble. The first bubble is the bubble of thinking that trading is all about technical, prowess. You think the more you understand and have this perfect and holy grail strategy, the more, you become better and the more your chances of being successful in Forex trading. However, I'm not disputing the fact that your technical trading ability is not part of the piece of the puzzle. Now, what technical trading will give to you is what I refer to as an edge. The technical trading is going to give you just edge, okay? The technical trading side is going to give you just an edge. And what do we mean an edge? An edge literally just means that's a chance for you to make money, right? So an edge is just what your technical trading is for you. But now, when you take an edge as though it's the main thing you need to focus on in your trading, then you're getting it wrong. And this is what I refer to as a trader's bubble. Okay? A trader bubbles is the mindset a trader has that thinks that technical edge, all right, is the only thing that you need to be successful in Forex trading. I know many of you can relate to that. Many of you guys are right on that spot right now. Many of you guys are not yet there, and many of you guys are starting to realize that, and you seem to be stuck and you don't have answers to what's the next thing that I got to do. So I'll take you on a journey, because for you to understand what I want to teach you, you need to understand your state of mind. So I want to speak to the state of mind that you have right now so that you can be able to relate to it, and I can postulate what you need to do to get out of that state of mind and achieve the consistency you need in Forex trading, regardless of the number of books you read, regardless of the courses you take. If you do not understand what I'm about to teach you, to be very honest with you, you will not achieve that consistency. So the first stage of solving a problem is to be aware of that problem. So the awareness right now is that many of you guys have this mindset that technical trading is all that it is about Forex trading. Your technical skill is what is needed for you to be successful in Forex trading. And that is what I refer to as a trader's bubble. So what is the next thing? Many spend many years within these bubbles. 1 year, 2 years, 3 years, 4 years before realizing. So the next stage that I would like to introduce you to is the stage of realization. Then the trader's realization. So what is the trader's realization? So this is the point where the trader now realizes that that Forex trading, this is the point where the trader now realizes that the Forex trading, it's not really about the technicals. Forex trading is not really about the technical as many of you guys have been made to believe, right? This is the time where a trader now realizes that there's so much sides to Forex trading, which is what? One, we have the psychology. We have the psychology. Two, we've got a risk management. Three, we've got a trade management side. We have the trade management side, because many traders actually realizes this after they spend so many years trying to figure out jumping strategies to strategies and trying to look for the perfect one. Then you get to a point where you're just exhausted. And now you begin to realize, now I got a working strategy, but why is it that it's not working? Now you start to see that your mind begin to evolve naturally beyond the technical skill set that you have. And it feels like the facade is beginning to get broken. And you see that, oh, there's so much sides to Forex trading than the technical side. And this is the realization phase. And the sad thing about this is that more than 80% of the traders will not persevere until they get to this realization state. What do I mean? More than 80% of traders will quit out of frustration before they get to this realization state. Only the few consistent ones that have huge determination are finally going to get to this stage where they realize that, oh, I need to reorientate myself on what I think I know. I need to get out of this bubble if I must make success in Forex trading. So now you now realize that there's so much sides to Forex trading. There's so much sides beyond just the technical trading, and it has its all roots in psychology, in how you think, in your relationship with the market. And the moment you get to this point, you have a bit of relief, but there's still a problem ahead. How do I have the right psychology? And this is the stage where many people are going to go on YouTube to, watch videos. If you're watching this video right now, you're probably on that stage right now. Many people buy books and courses and everything, and you keep reading and reading. And it's just about the theoretical side. People are telling you you need to have the right psychology. You buy like these courses and they're still telling you need to have the right psychology, but they're not telling you how to have the psychology. Many people are going to tell you you need to have the right psychology, but you wanted to know how can you work on the mind, and understanding the fact that the human mind is one of the most complicated machines that is ever built in history, because it takes a lot for you to master your mind. It takes a lot to subject that mind into discipline. It takes a lot to subject that mind to follow the law or plan, because naturally most of us got into forex trading because we needed to have freedom. And now we're realizing the freedom is not really free. You still need to work within certain things to condition your mind in a certain way for you to fully express that freedom to which you seek. So what is the reality? What do traders realize right here? There are two things a trader is going to realize right here. Two things they are going to realize. Sorry, three things. The psychology, right? Right here, the risk management side of things and trade management side of things. So now, how do you break this down? These three things right here are intertwined. These three things right here are intertwined. Everything still has its root in the way a trader conditions the psychology. So then the reality hits in. For people who have data of their trading, many people do not even have data. Many people just keep changing strategy. But many people at some point now begin to see that there's a repeated pattern in my trading life, in my trading journey, in my trading system, which is what I realize. You start to ask yourself question: what is it about me that I do on the market, on the chart, when I get in front of the chart to take a live trade, that really gets me messed up, that really get me into these big losses? Oh, maybe I have a perfect setup that later go in my direction, but for some reasons I exhibit certain traits or emotions that do not make me take that trade, or that make me over leverage that trade in such a way that I panic out and close out of panic only for the market to move in my direction. Many of you guys can relate to this. So then the reality starts to hit you. For people who are aware, for people who can take data, right, they now realize that there are certain emotions involved in their trading process, right? There are certain emotions that are involved in the trading process. And what are these emotions? What are these emotions? It's basically two emotions, which is what? The emotions of greed and the emotions of fear. Everything that's gotten you stuck in one position, all your trading journey are rooted within these two emotions. Because now you have a technical skill, but there's something still holding you back in such a way that you make certain errors that you know they are not technical related. They are psychologically induced error. And this is what I call them, psychologically induced error. So let me give an example of one. Maybe you have a perfect setup and you see that the setup is perfect and you're ready, add all your confirmations. You enter that particular setup with a high leverage because you don't have a plan for the consistent risk you need to take. That is stemmed in your psychology in the emotion of greed. Or maybe because you made a huge loss in your last trading, now you have a next trade that is giving you all your technical confirmation, but you are afraid to just execute that trade because of your last losses. That is the emotion of fear. Or maybe, just maybe, you have a perfect setup and you're waiting for your confirmation and you just do not want the market to leave you behind. But now, because of that reasons, you decide to enter the trade without confirmation, only for the trade to eat you out on stop loss and now get back in confirmation and go your direction. That is the psychology and emotions of fear, of missing out. So every single thing that has been holding you down, this is now the moment you start to realize in hindsight that what has been holding me down in my forex journey, that's kept me stuck even with regards to my technical skill being 75, 80%, what has been holding me down are rooted in my emotion. Then you start to realize that the market is not the problem, but it is you and your relationship with the market that is the problem. So this is what I want to bring out for you. So what is it about you and your relationship with the market that is not in sync, that is making you making this psychologically induced error? It's rooted in your emotions. And many of you guys realizes that it's your emotion, but many of you guys are doing it the wrong way. You think you can cut off your emotions. In fact, many courses, many materials, many books that you read are going to tell you that you need not to trade with emotions. But how can you trade without emotion when emotion is an integral part of your makeup as a human? It's impossible to say you will never be angry in life. It is impossible to say you will never experience fear in life. It is impossible to say you will never experience excitement in life. These are integral parts of us as human. So when somebody comes up with a material and tells you that, oh, this is what has been affecting you in your trading, now that you realize that it's your emotions that has been holding you down in your trading, you need to do away with your emotions, then that's a very wrong advice. That's a very wrong material. That's a very wrong psychology. That's a very wrong statement to make. Until you now start to learn the proper way to deal with your emotion, you're still going to remain within that stuck area where many of you are, which is the reason why you watch this video right now. So what is it about your emotions that you can do better, that is making you becoming greedy and fearful, which is not the emotion that the market demands from you? What is it about it? It's because you need to learn how to manage your emotions over eliminating those emotions. Even the best trader, myself, I feel the need to be greedy in the market every time I trade. I feel the need to be afraid in the market every time I trade. But how do I cope with these emotions in such a way that it does not affect my trading? Before I tell you that, let me break down these emotions for you, one after the other. So let's start with greed. What brings about greed in Forex trading? It's very simple. It's very simple. What brings about greed in Forex trading is very simple. It's the tendencies of a trader. So what brings about greed in Forex trading is very simple. It is the tendency of a trader to focus on profits. Okay? What brings about greed in Forex trading? It's really very simple. It really entails the tendency of a trader to focus on profit. And when a trader focuses on the money he can make, and money is the motivation upon which he's taking a trade, it's inevitable for him to be greedy, because now you believe you have a perfect technical trading skill that has a win rate of 70, 80%. And the moment your mind is conditioned to certainty, like you know the outcome of your trade, you know that your trade is going to come out in profit, it's going to come out as a winning trade, then you actually eliminate the probability mindset which the market demands from you. You eliminate that automatically. And now when you know the outcome of an event, then you operate to certainty. If I know I'm going to make money off this trade, then why do I need to take one lot? I could go 100 lot size. And this is where greed comes in. So to breaking it down, what primarily leads to greed? It's very, very simple. It's the tendency of a trader to focus on profit. The other emotions that you can have is what? Fear. So fear are expressed in two forms. Number one, the tendency of a trader to not want to miss out on a trade opportunity. This leads the trader, to being fearful. Okay? This leads the trader to being fearful. The tendency of a trader not want to miss out on a trade. Secondly, the tendency of a trader to not want to lose a trade after a big loss. Then it puts the trader in a state of fear. All right? It puts the trader in a state of fear. So these are the two things that are affiliated. So you got to deal with my writings, okay? So these are the two things that actually causes many of the psychological errors that you see. These are the emotions that are present: greed and fear. Now, let me break it down for you guys a little bit. The two emotions present in your trading is emotion of greed. And I'm going to tell you how they factor out in your trading. When you have greed, it causes you as a trader automatically to over leverage. Because why do you over leverage? You want to make more money. And you believe so much that your technical skill is everything you need to make money in the first market. And your technical skill is giving you a very obvious buy, for example. And provided that you are certain and you think your technical trading is all you need, all your life you've been made to believe that your technical trading skill is all you need to make success. Now you see an opportunity for buy. Instead of you to follow your right risk management, you see yourself over leveraging because you are focused on the money. Now, what you see on the chart is avenue to make money. What you do not see on the chart is the fact that you could lose money. So you are operating with a mind frame of certainty within an uncertainty field that needs you to have the most probabilistic mindset ever. That is how greed factors into your trading. So when you find yourself over leveraging, the emotion present in your mind at that point in time is great. You want to make money. Now, let's talk about fear. How does fear factors in? Fear factors in two ways. Number one, after you actually made that big loss as a result of your greed by over leveraging, your confidence level drops down and you're afraid to take the next trade. Many of you guys can relate to this. That's number one. Number two, when you are so focused on the money you need to make, it can cause you to have the emotion of fear. That means you start to treat that single trade opportunity as the only trade opportunity you will ever have. So you are afraid not to miss out in case it moves. Many of you guys can't deal with missing out on trade, even when you have a perfect setup. So because of that fear, instead of you to wait for your confirmation, at the close of your confirmation, you become so impatient that you enter a trade earlier than you need to enter, only for you to realize that it's going to move against you, and then you hit yourself and you're angry with yourself that you could have waited. That impatience was induced by the emotion of fear. So for us, now that we both know, now that we all know the two emotions, now that we know these emotions, basically greed and fear, let us now expatiate. Let us talk about these emotions and let us dig deeper. Why is it that this emotion, what is it about these two emotions that It seemed like it kept coming over and over and over. For years and years, you've been stuck. What is it about them? What do they have in common? What do they have in common? Maybe, just maybe, if we become aware of this emotion and how we can actually treat them, maybe, just maybe, we can start preferring solutions to solving them and getting out of this bubble and having a new mind frame in forex trading, which is the journey I want to take you guys on. I hope you're enjoying this so far. So what do they have in common? Greed and fear. So let's bring it out. Greed and fear. What is it about them that they have in common? I'm going to show you guys what they have in common right now. What they have in common is the fact that both of them have the trader's mind focused on money. Money is what they have in common. Think about it. If the greater reward of your trading outcome is not on profit or money is not involved, would you be a better trader? Yes. 100% of everyone would be a better trader because now there's nothing on the line. But the moment money gets on the line, your money is on the line, what happens? It induces these emotions because we naturally are emotional when it comes to money. So now I'm beginning to deconstruct the reasons for these emotions for you. I'm beginning to let you see what these things are. And I'm beginning to want it to help you have the right relationship and the right mindset for your when you sit down in front of your chart, in front of your laptop, in front of your trading desk, so that you can see. And this is not even about novice trader. This happens to actually pro traders as well. So when your mind is focusing on money, you tend to have these two emotions. And I'm going to show you how money induces these two emotions. So how does money induce this emotion? How does a trader focus on money induces this emotion? So I'm going to give you two case scenarios. The first case scenario is after you make a win. Okay? I want to show you how money affects and impacts how a trader thinks and how his mind operates in such a way that it has an effect on the way he relates with the market. So let me give you two case scenarios. The first case scenario is you have a technical trade on technical setup, and then you enter your trade and you made a win. Oh, let's say you even over risk, and luckily enough, the market hit your TP. What is the emotion that comes after that? Excitement. You have euphoria. You're so excited, you're so elated that you took a trade and it came through. You made money. Now, this excitement from that win can have a negative impact on your relationship with the market. It can induce greed inside of you. And I'm going to tell you how. So let me bring it out. Number one, excitement. Excitement after a win. Then number two, we have anger after a loss. So let me show you how both of them have the money factor influences all of this. When you make a win, you make profit and you're so excited. And that excitement, like I said earlier, could cause a negative impact on your trading. Because now, I'm going to tell you this. One of the most dangerous thing the market could do to you is to reward you for doing a terrible job, to reward you for not managing your risk, for you to hit your TP by taking a random lot size, by disrespecting the risk management, or by not even having a risk management plan. That is so dangerous because it's going to set you up for a big loss, and it's going to take you just less than 5 trades more. You're going to blow your account. Many of you can relate to this. Now, when you have a technical setup and you go in, with your lot size and you made a win, that excitement there makes you feel invisible. You start to think, oh, you've conquered the market. It has happened to the best of us. You've conquered it. You become so invisible. You start to see yourself differently. And do you know what this opens up for you? This makes you get into the market the next time recklessly. Reckless trading. So if you made a win now, you feel the need to increase your risk. Remember, you don't even have any risk management plan earlier before you made that win. Now you made that win off zero plan on your risk management. Now the next trade, because of the excitement of the last trade, then you think it's time for you to increase your risk. Now you feel that you've had it figured out and you start to trade recklessly. So your focus on the profit that you have made has influenced your thinking in such a way that it has taken your mind from having a system, a working system, for following a working system, to now having no system and actually increasing your risk more and trading recklessly. In fact, it goes as much as many people not waiting for confirmation on the next trade. So that's the first one. What about anger after a loss? When you have an anger, after a loss, before we get to the anger, this excitement after a win leads to your reckless trading. The chances that you will increase your, lot size or risk on the next trade is high, which still goes back to the emotions grade. Okay, so anger after a loss. What does anger after a loss have to do with your being greedy? Now, when you make a loss after you have this perfect setup, and you start to blame the market, you start to blame, make excuses. Oh, institutional traders, the banks are after you, blah blah blah. You refuse to take accountability and sit back and understand that the reasons for your loss is because of your state of mind. Then what do you do after you made a loss? Because you do not believe you're wrong, you go into that revenge mode. Okay? You go into that revenge trading mode. So what is the outcome of revenge trading? You want to make your losses back. Instead of you to decrease and sit back, get back on the book and decrease your lot size, you increase it, which still play out as great. Can you see? So now, after you make a big loss off of this, what do you think it leads to? Now, you make a big loss again by trying to after you make a win, then you go reckless in your trading, you make a loss. And after you make a loss, you become angry because you think your technical trading is perfect and the market is the one against you. Then you revenge and you even lose bigger again. So what happens? Your confidence level drops low. So which is going to lead me to the next thing, in how are these two emotions intertwined? So like I said, you have an excitement after a win without a plan. The market rewards you. It becomes dangerous. The next trade, you enter recklessly and you make a big loss and you become angry after the loss because you don't believe you should lose that trade. Then you make excuses for yourself. The banks are after you, the news, the this and blah blah blah, and many other excuses that you've made in the past, which are dangerous for your trading. You refuse to take accountability and sit back and look at the true reason behind why you're making those mistakes. Then you go into this revenge trading mode. And when you want to revenge, I've never seen anyone want to revenge the market by taking lower lot size. You increase your lot size than what you risked before taking that initial loss, and then you make big loss. So what happens? You lose your confidence. And what actually is the emotion that is attached to you when you lose your confidence? The emotions of fear. Now, you're afraid to take the next trade. You are afraid to take the next trade. And now you can see that this is a cycle that repeats itself over and over in your trading. You have fear, maybe at some point, just maybe at some point, you have fear, and this fear affects you so much in such a way that you take even more loss. You take even more losses. Then maybe eventually, you blow your account, account blown, and what is the next thing you do? You refund, you refund, and you go right back into that same cycle again. No plan. You take a trade, random trade, depending fully and solely on your technical skill. You make excitement after a win. It leads you to reckless trading, induces greed, and then, you make a loss. And after a loss, you try to revenge out of greed. Then you make a bigger loss. And now you're afraid to take the next trade. Because you're afraid to take the next trade, the emotions of fear induces its own effect, which is now, because of fear, you're afraid to miss out on the next trade, to miss out on an opportunity to make a profit back. And now you can't take the next trade, or you're taking the next trade out of, out of impatience by the reasons of fear. And now your account blown, you refund, you get back into the same cycle. This cycle right here has kept many traders for many years stuck on the same position. And I can tell you for a fact, transparency, this cycle right here kept me in for many years until I realized that I need to get out of this rat hole. So this is exactly what you're experiencing. And I know many of you watching this video right now can actually attest to the fact that this is what you're going through in your trading. The inconsistency when you look at your profit on graph, it goes up, then it comes down. It goes up and comes down, and you've been in the same circle for years. So what is the grand effect of all of this? All of this cycle, what is the grand effect of this on your trading? The grand effect of this cycle on your trading as a trader, the grand effect, not on your trading, on your psychology as a trader. What's the grand effect of this cycle on your psychology as a trader? Is very simple. The grand effect of this is that it induces lack of confidence in your trading. How many of you, after many trials and error, finally lose confidence in yourself? You believe you can't do it. That is the last emotion before many people quit at this stage. Now you feel like you can't do it. Then you go on people's traders page that are doing it and you feel like there's something they know that you can't do. Then you lose so much confidence in yourself. This is the point where many people even quit and looking for maybe a signal group to join and like, let me just make money, because you are not trading this. And when you lose your confidence as a trader, you will never be able to make money out of the market, because when you see opportunity, you are afraid to take it. And many opportunities are going to pass you by and you feel frustrated. And this is where depression comes in and you just can't help yourself. You're so helpless at this point in time. So the point I'm trying to make from the beginning is the mindset of this bubble right here and this realization and these emotions that you finally realize but you can't deal with. And this cycle that the emotion causes leads to just one thing. It leads to take your confidence in your trading away from you. And this is where many of you are right now. You do not have any confidence in yourself to trade, to make money in the market. And the moment you strip off your confidence to make money or to trade effectively or to trade by following a plan or to trade in a very disciplined way as a trader, then you have stripped yourself of every single ability to make money off the market. So how do we fix this? Been able to explain to you everything. Now, how do we fix this? It's very simple. How do we fix this? It's very simple. It's way simpler than anything you could ever think. How do we fix our trading psychology? Many of you guys have read so many books, watched so many videos, but you still meet yourself doing the same mistake. But I could tell you that what I'm about to show you in just a few minutes is going to fix your trader psychology for life, because I've done it. It's worked for me. It's worked for many other students that I have. And this can actually work for you. And I'm giving it out for you guys free. Now, because we realize that money is the root cause of all this psychologically induced error. Money being the root cause of these psychological induced errors. Not money per se. Let me correct that. Focus on money. So now that we know that our focus on money being the root cause of the psychologically induced error is the problem. So what is the solution? Maybe if we try to look at the market through another lens, another mirror, another point of view, another metric. Maybe if we just look at the market in a different lens, maybe, just maybe, we have a different outcome. So what is this different lens? You have to now start focusing. You've got to start focusing on process. Focusing on process over focus. Focusing on money. Now, what do I mean right here? What is a process? Your process in the context of trading is your trading system. Now, the question is, how many of you have ever stopped to say, you know what, this is not working for me. I think it's time for me to have a trading system. And a trading system consists of your technical steps. It consists of your psychological. It takes care of how your mindset should be when you're taking a trade. It takes care of your trade management, your risk, your definite risk per trade. So, for example, a standard trading system should have reasons for your trade entry, reasons for your trade exit, reasons for your confirmation. It should have a definite keyword, definite risk per trade. If you decide on 2%, every single trade you take for the rest of the year should be 2% risk per trade. It should have a definite risk reward ratio of trades you would like to take. Oh, if a trade shows me 1:1 risk reward ratio, then it's not within my trading system. It has to be 1:2 and above. Your trading system should have your trading management parameters. How do you manage your trade? If your trade moves on 20 pips in profit, do you break even? Or just like me, if your trade starts moving highs and lows and new highs and form a new low, do you take your trade? Do you move your stop loss behind the highs and lows? You need to have that. So the first step to solving for this is to focusing on process. But how can you focus on process when you don't have a trading system? So the first thing is to have a trading system. If you do not have a trading system, you can join my mentorship course. Via the link to my Telegram, it's going to be pinned, in the description. You can reach out to me on Telegram, for one-on-one mentorship service, or to buy my full Forex masterclass course, which comes with full trading plan and trading system that I've designed for all students that come through me. Many of you guys don't know how to design a trading system. Now, focus on process. Let's get back. Over focusing on money. When you focus on money, the difference is that when you focus on money, hold up. The difference is that when you focus on money, it causes you, as a trader, causes you to make emotional induced error, as we've said. But when you focus on process as a trader, what happens is that when you focus on process as a trader, it causes you to focus. It causes you to be guided by a system with defined sets of rules, which hereby protects you from random, erratic, disorganized, or emotional errors. So it goes back to what I said earlier when we started. The reason many of you came into Forex market is actually to learn to afford yourself the freedom of your finance. But then you're going to realize that even freedom requires guidance. Freedom requires you to have something that guides you. And this is what focusing on process is going to do for you. Process means you're focusing on your trading system. Those trading system now serves as a set of rules, constitutions, and laws that you must follow, that anytime you sit down in front of the market, mentally and psychologically, you are guided by certain things you must do and you must not do. So in this case, it's not about you making decisions. It's about you making decisions based off your trading system in such a way that when your trading system does not allow you to do something, now you wage that discipline as a trader to say, no, I'm not going to do this because it's not in sync. It's not in congruent with my trading system. And this is what focus and process helps you to do. But on the other end, when you decide to focus on money, you don't have anything that puts you in check. You don't have anything that reminds you of what you should or you should not do. The only thing that is in your mind, the only thing you see when you look at the market is either profit or loss. What you see only on the market is profit or loss, not system, not what you must do, not the confirmation you must wait for. You set yourself up to induce emotions, because when you focus on either profit or loss, on the day you make profit, it causes overexcitement, leads you to reckless trading. And that reckless trading is a product of greed. Then again, it leads you to want to revenge your trade. And when you revenge your trade, you make more loss, and it leads you to a state of fear, and you can't take the next trade and you lose confidence. This is what focusing on money or profit is going to do for you. So that being said, what is the formula that you need? As we are concluding this session, what is the formula? What is the formula that I postulate? Formula to fix your psychology as a trader. It's very simple. This is simple but yet profound. This is the summary of anything you can read in any book. So first of all, the relationship between you and the market. You should be able to know in your mind that first of all, you are a trader, and then there's the market. So let's say to the left side, we have a trader right here, right? And to the right side right here, we have the market, right? So where does the formula comes in? Now, as a trader, there are certain lenses through which you must see the market. You just don't approach the market without anything in between, without anything in between you and the market. So there has to be something between you and the market, which is what I'm going to show you right now. So the formula says, I'm going to give you what most people do that land them in inconsistency first, before I finally give the formula that can work for you. So the trader, this is the formula that most people do that land them in inconsistency. This is the trader. Between the trader and the market, there's a lens. And what is the lens? The profit / loss, which we can refer to as money. Focus. Hold up. Yeah. So the trader assesses, focusing on profit and losses. Okay. So traders focus on profit and loss right here. Then, so this is like a lens through which the trader sees the market, and you know the end result of this is what? Inconsistency. It leads to inconsistency in trading results. So when a trader right here focus on profit or loss is going to make, what the market does is the market will reflect what is on your mind. So when you look at the market through the lens of profit or loss, what happens is that now this sends a signal to the market, and the market gives you a feedback of your state of mind. And then that feedback is what leads to this inconsistency right here. And this is what most people do. So what is the right formula to use? The right formula is what? A trader, the right formula to use is a trader assesses the market. A trader assesses the market through the lens of his focus, through his lens, focusing on process, which we can refer to as trading plan / system. Then when the trader assesses the market through this lens, what happens automatically? When the trader assesses the market through this lens, what happens is that the market actually gives the trader a feedback, because now the trader is being guided by rules of what he or he mustn't do in the market. For example, the risk of this trader remain consistent from January to December, 2%, 3%. So on days where he has 1:3, he's making 9% on a 3% risk per trade. And on the day he loses, he's losing 3%. So he's still up by 6%. You can see the effect of following a consistent trading system. So you do not make the decision. You are under the law of your trading system as a trader. And what is the end goal of these things? The end goal of these things is that it leads the trader to what we refer to as consistency. So I'm going to say this. The consistency that you seek for as a trader is rooted in the lens through which you assess the market from. If you assess the market through the profit it can give to you or the losses you've made in the past, you are bound and vulnerable to making emotionally induced error. But when you look at the market through the lens of your process, you are bound to actually have a consistent habit towards the market. And I give you an example. When you sit down in front of your laptop, you have your trading system, which probably I've made for you. You're my student. You are being guided by that rule. That rule becomes the mantra upon which you operate in the market. So anything outside that rule, you're not going to do it. So naturally, it saves you from erratic and randomness in your trading. And it reflects in how your profit curve is going to keep increasing. So say your trader system, for example, says you're going to take only trades that are 1:2 and above. So your trade setup gives you, 1:3. You wait for the right confirmation as per what your trader system has postulated for you. And you set your exit as per your trading system. And you execute your trade with the right risk management as per your trader system. How do you set the right risk management? It goes to position sizing. It's a different topic on its own, and that's why I recommend if you are having an issue with your trading, you don't need to spend so much money chasing the next strategy. You're still going to end up in the same thing. You need to understand that this thing has certain principle to it. And I recommend the You Join My First Mentorship course, which I have all this already built up. All you have to do is just start it. Everything you need is right there. From the technical side of things to the psychological side of things, to the risk management side of things, to how to size your risk and how to do all of this within an enclosed trading system that it becomes a rule for you to be able to have a consistent attitude anytime you sit in front of the market. Let's get back. So when you have your risk Everything is being placed and you're risking nothing less than 3% per trade. Let's say the trade opportunity is 1:3. Upon that price eaten, you take profit and management, within, what we, within our trading system, the right trading management skill, you know, you end up in 9%. You made 9% of that trade. Knowing the true nature of the market that you won't always make profit. It's a fair share between profit and loss. Now, the next trade, you make a loss. You only lose 3%. You're still up by 6%. So let's say the next trade, you make a win, 1:2. You have another 6%. When you had the 6% that is floating in profit for that month with another 6%, you are up by 12%. And this is the holy grail that many of the top trader uses. It's nothing about technical. It's more about the state of mind. It's more about having a trader system that takes care of every side that make up the whole forex trading game, which is the technical side, the psychology side, the risk management side, the trader management side. The earlier you realize that this is what you need, the better you're going to get out of that ditch of inconsistency you're stuck in. Thank you so much. And I believe that this is, if I've taken my time to explain to you, first of all, carry you on a journey of awareness, self-awareness of what you can relate to that's happened in your journey. And I've brought the awareness of what actually is happening. And I've given you what you need to do. Now it's left to you to sit back and reevaluate what you've been doing wrong. You know this is true. You definitely know this is true. Reevaluate it. Get back on board. Get a journal. Write what you've been lacking. If you find it really hard, I recommend you find a mentor that can work. Not the mentor that teaches, but a mentor that delivers results and knows how to teach you. Get a mentor. Fix this issue. Because if you don't fix it, I promise you, you might be right on that same spot for 5 years, for 6, 7, 8, 9 years, until you get to understand that trading as a trader, you actually do not have that freedom you think you have on the market, but rather you need to be guided by a lens through which you view the market. You need to be guided by a rule of law through which you operate in the market until you realize that and you have that standard law and rule in a compact trader system. You're not going to make that profit. So this is the formula right now. Now, how do you build on the formula is left to you. But I've given you everything you need to know. And this you won't find in books. This you won't find in trading courses. This you will only find on this video. And I want you to take this for free and apply it to your trading. You can feed me back on my mail or on Telegram how this video has helped you. And if you need, like I said, again, my first masterclass is open. My mentorship is open. I really want to help you. You really do not have to waste so much money. You really don't have to lose so much money. You only need this knowledge, and you really need someone that could impact you with this knowledge the right way. Come, let me show you how this is done. Many of my students have been here before, losing with so much low confidence, but they got out back and they're doing very well. So I recommend that you do the needful. It doesn't have to be me. It could be another person that you trust. Just find a mentor. Find someone that can help you build a system. Find someone that could walk you through it, that could change and shape your mind. And I promise you, it's an investment worth it, because this is going to serve you for the rest of your life. I wish you the best of luck, and I'll see you in the next video. Thank you so much.